Good morning, everybody, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. As always, I'm your host, Real Estate Cody, and with me is the one and only coffee connoisseur himself, Mr. Brian Alfaro. What is up, buddy? Good morning.
Cody, good morning. Nice to see you.
Always great to see you as well. Always great to be here on the recording, talking to another great guest on the show. But before we talk about that, dude, we just wrapped up another exciting raise for a great opportunity. Always feels good to be oversubscribed on a project. Looking forward to the next one. What do you think?
Absolutely. Super exciting time to be in multifamily real estate. And the oversubscription is definitely an exciting thing to see. So, we always encourage anybody who's interested in investing with us, let's get on a call. Let's talk through everything. So when these opportunities pop up, you don't end up missing out, because now we got a waiting list going, and that's growing every day. And we want people to get in and enjoy the benefits of real estate.
Absolutely. Absolutely. Well said. Well, great way to kick off, man. So we got a rock star with us today. Tell us who that is.
All right. Today in the hot seat, we have Mr. Brandon, excuse me if I butcher this, Magierowski. Probably pretty close. He's a managing partner at Real Focus Capital Investments and an acquisition manager at VFR Capital. So looking forward to diving into both of those. Brandon is a native of Lethbridge, Alberta, Canada, and he came to Shreveport, Louisiana in 2004 to join the LSU Shreveport Pilots baseball program. After 3 years with the Pilots, Brandon graduated with a bachelor's degree in general business administration. In 2008, he joined the Prairie Baseball Academy as an assistant coach before returning to the LSUS baseball team in 2010 as a graduate assistant coach. His coaching position with the Pilots ended in 2011 after he graduated with a master's in business administration. Upon graduating in the spring of 2013, Brandon turned his attention to hosting baseball tournaments in the Deep South region to provide players a better opportunity for exposure to next level recruiters. And in 2014, Brandon aided the creation of the Diamond Dynasty and is the acting CEO. He currently owns multiple rental units in Louisiana, is a graduate of Multifamily University and a member of the Multifamily U Investor Group. He currently resides in Shreveport, Louisiana with his beautiful wife, Tiffany, and is a father of 3 boys. Brandon, welcome to the show.
Thanks, guys. You guys have awesome nicknames. I got to get with my team. We have no nicknames for each other, but no, I appreciate you guys having me. I've been watching you guys for probably over a year now, and we connected at the Dallas conference. I recognized your faces and came and shook your hands, and I just want to congratulate you guys. You guys are on a very fast trajectory. Like we were talking about before we jumped on here, it takes a lot of work, a little sleep, and you just got to compete in this thing. So congratulations to you guys on the deals you have going now, your success with the podcast. It's just, I just commend you guys for getting your faces out there. You're very recognizable, and that's how I saw you. I think I saw Cody's face at the Dallas conference. I was like, I know that guy. See him all over LinkedIn. So appreciate you guys having me.
Yeah, we definitely appreciate the kind words. And Cody, I know Brandon said it looks like we're moving very fast, but this has been 2 years in the making, right? It's been slow and steady.
Yeah, hey, it's this business, right? It's the iceberg model where people see the tip, but they don't see all the work that came behind it to get you to that point. But we're still early on and still growing and really excited about the future.
You guys been doing it for 2 years, you said?
2.5 years. Yeah.
2.5
years. So
if multifamily, or did you have a little portfolio before that?
So Brian and I both came from single family for several years before, but we became exclusive to multifamily in 2019. And then our third partner, John, was a passive investor since 2015. That was his only introduction and exposure to real estate, was as a passive investor through REITs and such, and then became active when, we launched Blue Oak Capital, and here we are. So it's been great.
Yeah. Kind of the same trajectory as our team. Back in 2014, I bought my first small multifamily. I could talk about how not so great that property was, but same thing. 2019 really flipped the switch and got into multifamily. Found a partner out of Panama City Beach who's active duty Navy. We went to a multifamily university conference with Neil Bawa. It was a 2.5-day conference, cost us some money, but we came out of that thing and said, we want to do apartment complexes, and we hit the ground running. But you're right. It's people see, the posts of, hey, we closed on this, we're over, we raised this much money. And they think it's just, oh man, these guys just did that overnight. But there is so much behind the scenes that nobody sees, but that's what it takes, master those unseen hours behind the scenes.
Yeah, you're exactly right. And, we really respect a lot of people that speak to just how much work that goes into this, because I think the failure of a lot of people when they come into the space is they hear the gurus, they hear the flashy stuff that people are closing thousands of units and raising millions of dollars of capital. And yeah, it all sounds great, but when you have to put your, foot to the pavement, you have to go put in the work. It's a ton of work, and it's a lot of work. And so it's definitely worth the reward for sure, but it comes with sacrifices. You definitely, you're definitely not getting into a passive role by any means. That is for sure. So,
yeah. And then what people don't see too is the mistakes that you've made, because a lot of that stuff is not promoted, right? We're promoting the successes we have because we want to draw people into our group to, we're the professionals in this, and that's how we're going to raise capital. But, early on in my investing career, my first property I bought was a mistake, and I bought it on emotion. I had money. I knew multifamily was it. I bought a 3-unit and a 6-unit in a market that I never should have bought it in. And I learned from that. I call that my junior college education. I think it cost me, it's a break-even property. It's not like I'm sitting here losing millions of dollars, but when you put in $50,000 to buy this property with the expectation that it's going to cash flow $500 a month, that's what you underwrote. Like, oh, this is going to be so great. This is passive income. This is what everybody's talking about. And I did it, but it didn't cash flow because I bought in what I found out later was the worst market to invest in multifamily in the entire country. And that's just a mistake I made early on. But I like to share that with people so they don't make that same mistake. So if you're trying to get into multifamily, market is probably one of the most important things I can tell you based off of my experience. Because the book that I read early on was telling me, buy your first property in your backyard. You got to buy close to you so you can keep your thumb on it and you know what you're doing. That makes a lot of sense, but you have to understand, where do you live? And I live in Shreveport, Louisiana. And after I bought a 3-unit and a 6-unit, they were not cash flowing. There's a lot of delinquencies. Part of it had to do with the property management, but a big part of it had to do with the market that I purchased in. I heard a guy on YouTube, Neil Bawa. You guys familiar with Neil?
Oh yeah, we've had him on the show a few times.
Grow Capitalist, brilliant guy, right? That's where we got all this market research knowledge from. So we heard him on a YouTube channel because we were like, what do we go wrong? We got to do market research. How do we do that? And we saw him, and he said, and I quote, he said, the worst market to invest in the country is Detroit and Shreveport. So Ramsey and I, my partner, were just like, oh my gosh, oops. But let's not dwell on it. Let's learn from it. So we went to Neil's conference. We went to the Multifamily University up in California. We dropped, I think, $2,500 a piece for a 2.5-day conference. And we learned how to market research. We learned how to syndicate apartments from A to Z. It was just a major educational event for us, a good networking event, but it really turned the light bulb on for us to say, hey, let's not make that mistake again. And since then, we haven't. We are using Neil's 5 real focuses to find the right markets, and even digging even deeper into the submarkets. So moral of the story, I guess, winding back is before you buy in your backyard, make sure your backyard's the right market.
Oh man, I'm so glad we're starting off the show with this topic, man. This is great, Brian, because number one, first off, so many good things come out of Neil Bawa's boot camps, Brian. I mean, look, you're the third. That's right. You and John. And then here we are, Blue Capital. But, Neil obviously is, as you said, man, brilliant. He's so data driven, and you can always learn something new from him, and really appreciate him and his value add to the community. But, to the point of making mistakes, going back to our conversation about the surprises that people discover when you get into being an active investor, is you've got to be willing to make the mistakes, right? You have to be willing to put yourself out there. And let's be frank. I mean, these mistakes can be very costly. They can be very expensive. But you're going to have to make some of those mistakes along your journey, and you can't be afraid of that. And it's hard. It's a hard pill to swallow, I'm sure. But like you said, man, where you're at today and your growth from that experience today is going to only set you up for further success. Probably even more accelerated success had you not made that mistake before.
Right. Yeah. It's just fail forward, right? You make a mistake, learn from it, educate yourself. Don't make the same mistake again. But I like to be transparent though with everybody that, talks about what's your portfolio, who's your partners, what deals have you done, and have you made mistakes? And you absolutely have made mistakes. But the reason you should trust me now, whether you're in on the deal as a general partner or a limited partner or, an equity partner, is that I've learned from the mistakes and we're not going to make those mistakes again. And here's the proof of, what we're doing now. Here's where we're buying, the Texas markets, Dallas, Houston, San Antonio, Austin, the Panhandle of Florida. That's our main focus now. We're not buying in Louisiana anymore. And they say why, and I explain why. Look at the population growth, look at the household income growth, the household value, everything, the crime rate, everything that Neil Bawa taught us, we are putting into action. And it's working. I mean, you guys live in Houston, correct?
Mm-hmm. That's correct.
So there's submarkets of Houston that I know Houston's an unbelievable metro, but we all know there's submarkets of Houston that you probably don't want to own property in. And that's where the market research comes in, and using the free data online to locate the best submarkets within that metro.
Yeah, Brandon, you're absolutely right. And Brian, that sounds too familiar, right? How many times do we get, solicited for opportunities from out-of-state investors coming into Houston, and we're like, don't go there.
Yeah. I mean, the old adage of real estate location, location, location is so true, right? We heard that from Grant Cardone pretty recently. And, you want to be able to not only buy a property in a good location, but you got to consider who you're going to sell it to, right? And if there's not a bunch of buyers lined up in 3 years and 5 years because the market's not very attractive, yeah, you might be getting it at a 8 cap or a 9 cap, but there's a reason it's an 8 cap and a 9 cap. And when it trades in 5 years, who's to say what might happen to that market, right? So there's a lot of variables to consider, and location is definitely, I would say, the first and foremost most important. I know it's what we do, right? When somebody says, hey, I'm interested in this deal, you guys want to partner or whatever, we're looking at something. Forget the X's and O's and the dollars. I don't care about the T12 and rent roll yet. I want to see where it's at. And if I don't like where it's at, just go ahead and move on. You don't need to waste any more of your time.
It doesn't hit the underwriting spreadsheet until the market research is done. That's the first thing we do. We get a deal from a broker or a general partner. It's like, okay, well, we're going to plug it into our data system and say, okay, does it meet metro? Is the metro good? Okay, is the submarket within that metro good? And there's certain data points. And if it fails market, we don't even go any further. We just put it in the dead deals and we move on to the next one.
Yeah, I love that approach. I think that's so smart. And, right now, especially right now where we're at, Brian and I just did a presentation on the housing supply and balance, supply and demand imbalance, excuse me. And, the critical shortages of affordable housing across a lot of the general United States, right? And for investors, that's a good thing because that gives us, you're seeing the massive appreciation, you're seeing the demand for rents and things like that. But the problem is you have a lot of fear of missing out, the FOMO syndrome, where people are trying to buy in deals just to get in deals because they don't want to miss this incredible market cycle that we're in. And to your point about markets, I think you have a lot of people that are going into markets that, don't have the right fundamentals that could potentially leave them exposed if they're not able to execute that business plan. So I think it's good to have that reality check and just make sure that despite whatever's happening in this market, you still have to have good fundamentals when it comes to selecting market.
You put the emotion aside. As much as you want to get in the game and as great as the market is right now, you cannot buy on emotion or gut feeling. You buy based off the data. Does the data meet market metrics? Yes. Okay. When I underwrite the deal, does the data give the returns to the GP and the LPs that I'm promising? Just buying on emotion is just going to get you in trouble like it did back in Shreveport. I was young in the game. I wanted to get my money in it. I had money. Buy in your backyard, multifamily, great. There's a 3-unit right there, a 6-unit. Look, they're underwriting to cash flow, but I was underwriting them as if they were in a market like Florida, because that's where my partner owned his properties. He said, yeah, just use this underwriting spreadsheet. What's working over here will work over here. Okay, great. Well, $500 a month, that sounds fantastic. I'm excited. I'm going to go buy these things. When I wish I would have went back there and attended the Neil Bawa conference before buying anything, hire a mentor before buying anything like that. But again, those are mistakes you make, the mistakes you learn from. And it's made me a better investor today because of those mistakes.
Yeah. And you know what else, man, is it makes you relatable. right? And this is something that we had a good friend of ours, Spencer Hilligoss, on the show, man, over a year ago. And he talks about this, right? When you're vetting a sponsor, you want to ask them if they've made mistakes. And you want a sponsor that has, for the exact reason you just mentioned, right? Is because what do you do with those mistakes will determine what type of investor you're going to be and what type of fiduciary you're going to be for investors' capital moving forward. And if you're somebody that can pick yourself up, learn from those mistakes, and become a better investor, that means you're battle tested. And you want that as an investor. So I think I have a similar circumstance myself. I had an attempt at a capital raise in 2019, shortly after getting into the space, and I failed miserably at it. And I was so embarrassed to tell that story for the longest time. I felt like people were going to look at me and judge me and like, oh, they're never going to want to partner with me. But here's the reality is everybody in the space makes mistakes. And the ones that are transparent about it, again, it just makes you relatable. And it makes for great opportunities to add value to others, like you said, to help them from making that same mistake that you did. And I think that's what resonates really well with people.
What was that mistake? I'm just kind of curious on you. Did you promise a certain capital raise or?
I did. Yeah. I committed $300,000 to this raise, and it was a small chunk. Right. But I started out with my close network of friends and people that I knew that had interest in real estate. But, man, looking back, what I didn't know is, I, number one, didn't have enough understanding of syndication. I was trying to educate on the fly. I was being taught on the fly. All I was doing was just trying to, ready, fire, aim, right? Mm-hmm. Just taking action. But because I was tapping into a network of investors who they were interested, but they themselves didn't know anything about syndication, it didn't resonate well, right? I couldn't articulate the story and why this was a good opportunity for all of us, because I wasn't sophisticated enough and I wasn't doing a good job of educating them. So
they basically, the investors kind of saw through that, like, hey, Cody's a great guy, but I don't think he's ready to take my money and make it work for me. Is that absolutely kind of the gist of it?
Yeah, absolutely. Yeah. Absolutely. Because, look, here's the reality is when you're putting up $50,000, $75,000, $100,000 into an operator, into a deal, they want to have confidence in you. Correct. That they're ultimately betting on you. And if they don't have that confidence and they see that, you don't have everything together, they're not going to write you a check, and they shouldn't. Right. I wouldn't put my money in somebody I wouldn't trust, or that, so
it's kind of the know, like, and trust is what the basis I go off. Do they know you? Have you established a relationship where they like you and they say, yeah, this guy's a good person. He's got a good value system. And then do they trust you as a syndicator? If I give that guy $50,000, do I trust him enough to know that he's going to do everything he can to make that property perform? Yep. And that's the power of raising capital, especially from family, friends, colleagues, because they already know you. Most of them already like you for the most part. Some family members probably don't like me, but that's okay. But then it comes down to, like, is he credible? Has he done this before? And if he hasn't done this before, is he on a team that has done this before? We went through that. Our first capital raise back this past June. We got called in 2 weeks before close on a deal in Dallas where somebody said they were going to raise a certain amount of capital and could not. So they overpromised, underdelivered. They were removed from the deal. We got called and said, hey, guys, can you raise $250,000? We have 10 days to do it. And this would be our first capital raise as a team. So leading up to that, we actually ended up raising $500,000 in 8 days. But that took 8 months of work leading up to that time frame. We dialed it back. We started Real Focus. We had the team of 3. Now we have a team of 4. And we said, okay, we don't have a deal right now, but what we do have is the education and the expertise to inform people that when we do have a deal, you can trust us with your money, and we're going to make sure the deal's right. So we created the website. We started talking to people, basically just telling people what we're up to and why real estate's a good investment. And that was 8-month period before a deal really came. And along the way, we would have investors be like, hey man, where's the deal? Where's the deal? And what you got to tell them is like, listen, we're not just going to buy every deal. These are the certain criteria we're looking for. You got to sell them on the fact that you are so protective of which deal you're going to buy that when that right deal comes, they're ready to give the money. They're like, yeah, this guy's done his due diligence. He's underwritten 100 properties to get one. And that's what we did. And when the time came, We promised $250,000. We over delivered at $500,000, and our credibility stake went way up. So and since then, we just kind of carry that momentum. But it just comes down to that no like trust, and under promise, over deliver on everything.
Yeah, man, I 100% agree. I know, Brian, you're shaking your head. I mean, it's so true. It's so true. And listen, when it comes to capital raising, it's all about relationships. And it's funny, you talk about your close friends and family. They're probably the hardest people to raise money from, to be honest. They're probably the most difficult. But when you have to have economies of scale, you have to have a large network, because there's all kinds of factors that play in. There's liquidity constraints, there's timing constraints, especially with this year where there being so much transactional volume. There's so many deals out there for investors to choose from. So, just relying on a handful of people in your pocket that you think are going to come through for you is really going to lead you to a lot of frustration. And so I think it's important. We always tell people, like, the best time to be raising capital is when you don't need it, right? You always want to be growing that database, always want to be planting those seeds. And to your point about the 8 months, I mean, look, you got to plant that seed and you got to nurture it, because it takes time to build that relationship before somebody wants to actually, take that investment and trust you to do that. So,
right.
And that goes back to some of those mistakes I made on that first raise, and all those things above, everything like that, not having enough people in my database to turn to, not having the sophistication, and also working with people that, again, had interest in real estate, but didn't know what it was. And not to say you shouldn't partner with somebody that doesn't have investing experience as a passive investor, but, you have to really think about who you're trying to attract as your ideal avatar. And it's so much easier to raise capital from investors that have experience investing, especially passively, versus you're trying to educate somebody for the first time and get them started. So I think it's good to have a mix of both, for sure. But that it can be quite a task trying to overcome that if you're new.
But early on, I think you'll agree with this. You are going to be raising capital from family, friends, colleagues on a 506B, right? I think that's most of the deals that early on are not going to be all accredited investors. But you kind of said it, like, it's really tough to raise money from your close family, your close friends, because the reality is not a lot of them are going to have $50,000 laying around ready to roll into real estate. But the question you need to ask is, okay, cousin Sam, you don't have $50,000. Who do you know that would be interested in investing in real estate? And you follow that pipeline of that network. You create that branch off of that limb of cousin Sam, because he's going to know 3 or 4 people. Oh man, yeah, my buddy, he's loaded. He's a doctor. That's how you reach past the family, friends, and start creating relationships outside of that. And that's what will lead you to those accredited investors down the way.
Sounds familiar, right, Brian?
Yeah, referrals are our best friends in this business. So getting people to stand by you and say, hey, I've been following these guys for a while. I listen to their podcast. I go to their meetup. Maybe you've even invested in one of their deals and things are going well, and referring you out to friends and family. That's the most powerful way to get somebody into your network, right? So you can do all the traditional stuff, and that's great. And it just takes more time, but a reference is always super strong in this business. And it's the way to really grow your portfolio, in my opinion.
Yep.
Yeah, definitely agree. Well, Brandon, I want to spend some time kind of going down this path even more. And we talked about the time to develop this relationship. What have been some of the tricks for you that have worked in nurturing those relationships? And let's say, for example, maybe it's a new referral, somebody that's just now getting introduced to you for the first time. What's that path of nurturing look like from the time that you meet this new investor to the time that you actually get them to be a committed investor?
It's the power of the follow-up. You're going to get a new contact come across your desk, like, oh, hey, Sam Jones wants to invest. He's interested in investing. You get that referral from a family or friend. So a lot of people, what they'll do is just toss that person into their sales funnel, into their active campaign or HubSpot or MailChimp, and just shoot them email after email after email. It's like, well, you've got to create a personal connection with them. So yeah, you can put them into your database and get in that email, but you've got to follow up right away and be like, hey, I got your contact information from so-and-so. I'd like to talk to you about some opportunities we have. and get to know you, and get them on a call or get them through text message. Get them to know who you are, get them on Zoom so they can see your face, and then follow up on that. If they express real interest, put the notes inside of Active Campaign. That's what we use. Put the notes on the investor in there and set a follow-up date. Like, follow up with Sam in 2 weeks and make the notes. He's got a family of 3. He lives in Colorado. He's a doctor. He has potentially $100,000 to invest. And then when you go follow up with him, you just go read the notes before you go, and you go, hey man, how's the family going? How's Colorado? You know something about him. And that just creates, a real authentic relationship with that guy versus shoving him into a sales funnel. Click here, click here, click here, read about us, read about us. This is us, shoving that down his throat. Make it about him. Like, hey, I'm reaching out because you want an opportunity to invest in real estate, and we can provide that, but we got to make sure it's the right fit for you. And the next deal may not be a right fit for that guy. But if you can keep on him and create that relationship, this 5 years from now, he might invest in the deal. He might invest in the next deal. You never know when the timing is right for the investor. And make sure that you empathize with that you don't necessarily going to take his last $50,000 at the time he's not right for him. And that's going to create the trust with that investor.
Ooh, Brian, that was a whole big nugget right there, man. I mean, look, you're dealing with people, right? You're dealing with, you're interacting and engaging with people. And at the end of the day, most importantly, you have to take the transactional piece out of this. Because, if you're focusing only about, hey, the business side and how do I get you invested, you're never, ever going to grow and scale your ability to raise capital, because people want to work with who, like you said, they know, like, and trust, who they have a relationship with. And that comes from, like you said, creating that authentic relationship. Right, Brian?
Yeah. People want to invest with people they, like we've been saying, know, like, and trust, right? Yeah. So if you're not establishing that rapport with somebody, how likely is it that somebody's going to meet you for the first time and wire you $100,000? I mean, it happens. We've had it happen. It's definitely one of those things that can happen, but at the same time, it's just not as common. People don't wire money to people they don't know, right? So you want to establish that rapport, you want to establish that relationship, and like we were saying earlier, you definitely want to do it before you need the capital, because if you get to a point where you're scrambling at the last minute and you're trying to get another $100,000, $200,000, $300,000, and you've never had a conversation with somebody, they might be extremely interested, but something in their gut might just be saying, now's not the right time because I just met this guy.
And especially most of those people, that have that 100,000 or 200,000 are sophisticated or accredited investors.
Yep.
And they're way less likely to invest with someone that they don't know or can't see their track record. They just understand the risk a lot more than if I called my uncle and said, hey, uncle, like, I'm in trouble, I need $100,000. He's like, well, okay, I trust you. You're my nephew, right? So that's a really good point. You got to start the nurturing process early, but don't, like Cody said, don't make it transactional. You got to make it authentic. You want them to, understand that you're just like them. You have a family, you have goals and desires, and this is why you invest in real estate. And this is why I think it'd be great for that person to get involved in real estate.
Yeah, Brandon. And there was one last piece there you mentioned a second ago, or you kind of hinted around to, is in part of that nurturing too, you have to be willing to have the confidence to turn people away when it's not a right time for them, or if it's not a right fit, and look, in the beginning, as a capital raiser, you're going to want to take every dollar that somebody will throw your way. And it's very easy to get lured in that, but you have an overwhelming responsibility to not put people in a situation where they're already taking risk and investing in real estate. But if it's their last $50,000 and they have nothing else, do you really want to put them in that situation knowing that they're going to be illiquid for 5 years? You have to have that responsibility and that confidence to say, hey, look, I know you want to invest, but this is just not a good time for you. I can't accept that capital knowing you're going to be in this situation. And you have to ask those questions, and you have to be willing to do that. Even if it means that you're not going to hit your capital raising target, you have a responsibility to take care of your investors. And then I think that's what helps also build a trusting relationship long-term, because when you turn somebody away, even though they may not like it at first, they're really going to respect you in the long term, especially when they realize that, hey, you know what? Yeah, this really wasn't the right opportunity for me.
Yeah, there's two things in people's lives that are very valuable to them. That's their kids and their money. And if you're dealing with either one of those, like on our baseball business that I run full time, we deal with a lot of athletes and people's kids. And we also charge money. Okay. With real estate, we're raising money, which is people's savings account, retirement. You have a profound responsibility to do right by those people when you're dealing with those two things in their lives, because those are the most important things in people's lives. And unfortunately, there are syndicators and there are businessmen out there that will take your money, even if it is not the right fit for you and your family. And that's why our team is investor first value system. This deal is right for you, but if that's your last $50,000, you should probably save another 50 before you get into the deal. And that's where it comes into understanding who is the investor avatar, what is their background, how much money do they have to invest, how much money do they have in their savings. It's a responsibility of us to guide them. I know we're not financial advisors or CPAs, but since we are investing in large apartments, we have a really good understanding of finance, savings, emergency funds. So talk to your investors about that. Hey, you have a family of four. Do you have $50,000 in an emergency account just in case things go south? Or is this your last $50,000 that you're ready to risk into real estate? And if it is, let's pump the brakes a little bit and let's get you on the next one.
Yeah, we love those philosophy. I know that's something Cody and I are definitely preaching. And those are questions, I think, we're speaking to any particular capital raisers, those are questions you have to get confident asking, right? You can't be uncomfortable asking somebody, hey, is this your last $50,000? Or tell me about your net worth. Tell me about your liquidity, and sort of diving down the rabbit hole to make sure that it's not being nosy or, getting into their info. It's just making sure that it's the right fit for them. Because if we don't check all those boxes, then we're not doing our due diligence as a fiduciary of other people's capital. And we're unintentionally, by not asking, putting them at even further risk, right?
Yep.
So it's definitely something that we're very mindful of as well. And I know we have turned away more than a handful of people who have wanted to invest, but it just wasn't the right time. They weren't educated enough. They needed a lot of other education before they really understood how the business was operating and how they were going to get cash flow, how they were going to, get their money back, what the business plan was. And that's okay. We'll continue to nurture and educate them. And you're right, a time will come. It might be 5 years, it might be 3 years, or it might be the next deal. Who knows?
It may be never.
It might be
never. Maybe never.
Yeah. And that's okay too, right?
Yep.
So we're still providing value. And it goes back to what we were saying earlier about referrals, right? Maybe they go down the rabbit hole and they never decide to invest, but now they have some knowledge and they're probably going to know somebody that might be interested, right? So you never know where that relationship still might lead.
Yep. I love it.
And Brian, think about how many times have we referred people to other investors? Maybe because we didn't have a deal for them, or we just knew that we weren't a right fit, but we've referred them to other people. I think, again, you got to look out for people. At the end of the day, you just got to look out for people, and it can't just be about you and your goal. You have to help others achieve their goals. And as an investor, if you're looking for a certain type of opportunity and it's not what we're chasing, hey, that's cool. I'll refer you to the guys I know that are doing it. And maybe they might be a better fit for you. So you're always looking to give back that value and help look after other people's interests, even if that means that they're not going to work with you. And you got to be okay with that. So
100%. Yeah. I mean, some deals are cash flow heavy, and that's perfect for a particular investor. And then some deals don't have a lot of cash flow. They're more of an equity play, right? So you really got to know your investor and what they're looking for. And if, they're looking for cash flow and it's an equity play, maybe it's an A class with appreciation versus, heavy reposition with heavy cash flow after a refinance or something, then you just got to be able to tell them, like, look, this isn't the right deal for you, or I'm not the right private equity firm for you. Those are not the types of deals we go after, but let me connect you with somebody who is. And I think there's a lot to be said about your character when you're willing to do that for somebody.
And if you connect them with another GP group, that creates that bridge for opportunities down the road, with that other group that may have deals down the road where they need help with, and they come back to Blue Oak Capital or Real Focus, because you guys are willing to share information and share other investors with them on their deals. Hopefully it comes back to you in the long run. Hopefully.
It definitely does.
Sure.
I think Cody and I are, we're where we're at today, and we are not anywhere close to where we want to be. But I would say most of our success has been it's just stuff that's come full circle. We've helped other people, and it's just coming its way around. Karma, whatever you believe in, but the good kind.
Yeah. And that's what I love about the large multifamily space, versus single family. I think single family is pretty cutthroat. And I think because the barrier entry is, just lower dollar amount, right? You can get into single family with $10,000, $15,000, and nobody's willing to help each other for the most part. It's cutthroat. It's who can mail the most flyers and get in the inbox, and who can find the family member that died and hustle and try to get the kids to sell in their house. Multifamily, you're dealing with sophisticated people that understand that they can't close large deals for the most part on their own. So they're looking for like-minded other groups like Blue Oak Capital or Real Focus, whoever it may be, to come take these big deals down together and educate investors together, and do a deal with one GP group the next and find another one on the next deal. It's just a big sharing of information. We're still competing for the same deals. I just see large multifamily as a much more, there's more camaraderie than the single family game.
I definitely would agree with that. It definitely is a team sport in this. And I mean, look, coming from a sports background, how important is the team aspect is,
Right.
We were talking about this before the show, right? All the hats you have to wear. It's too much for one person. And you have a few that are out there building their business on their own, but it's far few in between. I mean, it truly is a lot of responsibility and a lot of work. And, it's a big undertaking to really just try to do it all on your own. Like, why would you not want to partner with other people and, bring teams together and not only grow your opportunities, but I mean, just sharing the wins, sharing the victories, bounce ideas off of other people. And I mean, if you're just a one-man show, you don't know if you're doing something wrong, you're going down the wrong way, or maybe that wasn't the best idea, but having somebody there to kind of, rely on to kind of give you a different perspective is important. So
no doubt. And for us, our bandwidth is pretty limited inside of our group. We got 2 active duty military. We got 1 full-time home inspector, and I'm full-time a W-2 with the baseball business. And I've got a couple other side businesses as well. So the bandwidth isn't there for one of us to just take the lead and do it all on our own. So we're sharing that bandwidth with other groups that have expertise and leverage their experience and take down deals together.
Yeah. Awesome. Well, Brandon, man, tell us what's been going on in Real Focus then. What's on the horizon for you guys right now?
So yeah, like I said, past June, we closed our first big deal in Lubbock, Texas. It was 119 units. We came in pretty late on that deal and were able to raise quite a bit of capital for the group to get that across the finish line. And that group was VFR Capital. And since then, they're based out of Dallas. They've actually brought us onto their team to help take down more deals in Texas. We are focused on the Florida market as Real Focus, and then we partner with VFR on the Dallas market. We currently under contract on a 32 unit deal in San Antonio. And kind of back to the point about creating relationships and finding other GP groups, is this deal was brought to us by this GP group because we hosted him on our podcast, and I and Ramsey were on his podcast, and we talked to each other, and we're like, man, they got the same value system as we do. They seem like really trustworthy guys. And lo and behold, they have a deal in San Antonio that they need help with. We're going 50-50, and that's set to close in mid-December. So just the trajectory is going forward. Obviously, like Brian said, it's not going as fast as you want it to go. But that's just part of it, right? Like I said, if the bandwidth isn't there to do it full time, you can still carry momentum and close maybe 1 deal a quarter. So moving into 2022, our plan is to close 1 large deal a quarter, 90 plus units, Class B and C, $10 million plus properties, focused on the Dallas, Houston, San Antonio, Austin market.
Brian, you can see some kind of alignment here with Real Focus moving forward, man. Sounds like there might be some synergy there.
I think there's definitely some synergy, and we're going to find a way we like to work with good people, right?
Yeah.
I mean, that's the name of the game. And if you're in real estate, find other good people to work with, and like you just said, you find synergies and opportunities tend to magically appear. I'll put it like that. So
Yeah,
it's funny
absolutely.
when you're looking at the same thing. We always like to say it's better for us to work together than to compete against each other. So, if you're looking at a deal in Houston and we're looking at the same deal, well, let's jump together and figure out a way to take it down and just flex a little bit harder as a team versus going at it together.
Yep, absolutely.
Yep. Yeah, and Brandon, to your last point there, about growing, we all want to scale. We all want to scale quickly. I mean, we all have some type of financial goal we want to achieve in this space, right? But I think there's something to be said about taking your time and pacing yourself, making some of those mistakes, learning from those mistakes, and just continue to set yourself up for the future. When you're building a home, you have to set a good foundation, right?
Mm-hmm.
And if you're scaling too quickly, you could be leaving yourself exposed with a weak foundation, and when it crashes hard. So, take your time and look. You're buying multi-million-dollar deals, 10 million plus deals. I mean, one a year is a big deal.
Yes.
So to do one a quarter, that's still a tremendous amount of growth. So,
and the only way we're going to do one a quarter is with partnerships.
Absolutely.
On our own, real focus. We don't have the bandwidth to do that, but with partnerships, with VFR Capital out of Texas, with groups like you guys and other like-minded groups, that's a realistic goal that we can take down a deal a quarter next year.
Yeah, like you said, you lean in heavily on those relationships, man. Absolutely, and that's how everybody's finding their success for sure. So, well, Brandon, man, this has been a great conversation. I love the real talk here. This is a bunch of nuggets here, and I hope people really pay attention and go back to listen to this because this real talk is what we need in this space, man. So really appreciate your time. But before we go, we got a few more questions, man. We'll wrap it up here.
All right.
Awesome, man. So look, tell us what you like to do for your continued education to further your own investing.
So I'm a big podcast guy, and then I try to read a book a month is probably realistic for me. A book a week I could say I'll do that, but we got family and kids and jobs and stuff. But so yeah, that's a book a month. And then when I'm driving in the car, I'm either listening to audiobooks or real estate podcasts. That's my education, kind of education on the go when I'm going place to place, driving around. At podcasts like there's thousands of podcasts out there on real estate, and everyone's got a different story to share, and everyone's got different expertise. So I think that's my main source of education.
Love it. Looking back on your trajectory, what was that one moment of time or one event that changed the course of your business?
Hiring a mentor, finally getting off my wallet and paying someone to show me how to do it, show our team how to do it. Like I said, I wish I would have dialed back 4 years ago and paid for that mentor. But I didn't understand. You thought mentorship was free. This guy's done it. He'll just show me how to do it. The reality is, get off your wallet and pay for a mentor, but find a mentor. Someone told me this a few weeks ago. Chris Laverick told me this on my podcast. He's like, find a mentor that is selling the step-by-step process, not a lifestyle. So a lot of mentors and coaches out there are saying, hey, come learn how to do this because you'll be on the beach living with financial freedom and mailbox money, and look at all the cars that I have. And they don't tell you on how do you get there? What's the next step I need to take? So we hired a mentor named Tim Kelly back in the spring of this year, and we paid him for, I think it was 6 months, once a week. And we knew we had the team. We knew we had the mental fortitude to do this, the competitiveness, but we were kind of like straight voltage. We didn't know which direction to go next. Do we go raise capital? Do we go find deals? Do we make broker relationships? Do we find other GP groups? So we paid him to get us on the right trajectory. And my biggest regret is not hiring him 4 years ago, but we can't change the past. So
Tim's a great guy, man. We've had the fortune and pleasure of having him on the show, and really good to connect. So it's great advice, man. Great advice. So in speaking of that, what advice would you give to the listeners to help them grow their businesses?
Compete. It comes down to being able to compete. What you're trying to do, well, thousands of other people are trying to do it. So what are you doing behind the scenes that nobody else is doing? Are you getting up earlier? Are you meeting more people? Are you getting on podcasts? Are you hosting a podcast? Are you writing blogs? Are you creating a website? Are you doing the things that other people aren't willing to do? Because this syndication stuff is very, very difficult. And if you're weak, not willing to compete, it's going to weed you out very quickly. So basically my motto is, master the unseen hours, do things behind the scenes that nobody else sees and do them better than everybody else. And that's going to take you to the next level.
Oh, Brian, that's another good line, man. Master the unseen hours, man. Oh, I'm fired up. I want to go run through the wall now.
Let's go.
Well, Brandon, man, tell the listeners how they can get connected with you and learn more about Real Focus.
Yeah, it's just realfocus.org. Email is brandon@realfocus.org. We are very open to having conversations with anybody that's interested in real estate, even just want to connect, on the sports level. I'm a big baseball guy. So brandon@realfocus.org.
Awesome. And for anybody that didn't catch on, a lot of good things come out of Louisiana. You got Grant Cardone, you got Cody Laughlin, and you got Mr. Brandon over here at Real Focus. So let's make some big things happen. But Brandon, hey, man, appreciate your time on the show, man. It's been a great conversation. Definitely look forward to staying connected.
Appreciate you guys.
Thanks, Brandon.